Top three things: U.S. dollar, 10-year bond yield, U.K., United Kingdom being. Number one, U.S. dollar, interestingly, but maybe not surprisingly, is starting to bake in that maybe midday while you're having a cupcake. Hills and Rath will come out and say, well, you know, they're not going to taper in December despite the data. That's what the dollar's saying. Don't forget the dollar's down for 4 consecutive weeks, and the dollar has been the leading indicator the entire way, so don't forget that. And again, you just want to be watching that in real time, in as much as you might be wanting to watch the bat line waiting for old Hillsy. Number two, 10-year bond yields. Now, will bond yields go up or down from here? Remains the question. 10-year bond yield, of course, has not surpassed its September pre-non-taper whatever high, and that is what it is. So again, watch that level. It's a very important level. There's a tremendous amount of political momentum behind not letting interest rates rise despite economic gravity. So again, there's probably 20 to 30 basis points of downside in the 10-year bond yield on a Hills and Rath rumor, just in case you care. Finally, the United Kingdom, which thankfully for them does not have Ben Bernanke or this guy Euston Goolsbee talking about what it is that it is. The UK has a new central banker in town, and the UK also has fantastic economic data that is born out of what? The same things that fantastic economic data in the U.S., which would include inventories building. Just newsflash to those of you who run a business, when your confidence goes up, you don't cut your inventories. I mean, geez. Anyway, back to the UK, you see home sales up home prices up 7.7% year over year in November. That's versus up 6.9% last month. You see vehicle sales accelerating. Again, it's all confidence rising, small to medium business confidence rising in the UK, and so is consumer confidence alongside a strengthening currency. And you know what we think about that. So those are your top three things.